Now, wave one, once you have wave one, boom, we know how wave one is now. We are looking at it from an uptrend perspective now. Wave one, boom, to the upside. So once you see wave one, it tells you that the investors within that what wave one are seeing that market movement to the what? To the upside, and buying at a what? At a cheap price. And buying at a what? At a cheap price. That is, it is the beginning of that wave. So it is still early for early buyers. Do you get it now? So exactly. So that is a perfect time to buy. And how are you able to know that? Through your candlestick pattern and other measures. Probably it's as your support zone or support channel. Do you get it now? All those things, you look at those measures. You look at your chart patterns. Are we following? Now, they are not saying that it is not a time for us to what? Go to the upside. So market will now move what? All the way up. Boom, boom. But now, if market goes all the way up, it causes the market to rise. Is that not so? Boom. So now, once it gets to a particular point, boom, wave two will now form. Wave two now tells you that at this point, so I want you to understand the psychology behind this pattern. Now, at this point, people that were originally in wave one originally in wave one have seen the market, have seen the what? The market overvalued. You know the meaning of overvalued? Exactly. I've seen the market what? Overvalued, and they've what? They've taken profits. And if they've taken profit, what happened? They are out of the market. The buyers are out of the market. They've taken what? Profits. Now, this will now cause the market movement to what? Retrace, go down. Do you get it now? All right. Hmm. So once this happened, boom, retracement to the downside. But you are still seeing the overall market to the upside. This retracement will never get to your what? Below this guy, if it is to go up. Do you get it now? That will now cause what? Wave three. So after the end of this, boom, wave three will now start. To now tell you that buyers are now back into the market. No, buyers are now back into the market. To extend the movement of the market for a longer time. Now, buyers are now back to the market to extend the what? The movement of the market for a what? for a longer period of time. Please get this. For a what? For a longer period of time. And it is referred to as the strongest wave because the movement of that wave moves for a very longer period of time, which implies that if you have wave one, boom, like this, and you have wave two, wave three can move for a very long period. Do you see wave three? Is it the same with wave one? So at this point, wave one took their profit at this point. Boom. Yes, because they've seen this market overall to the upside. But it has gotten to a point at which their entry, the entry is at it is at a cheap price. So you don't know if they will definitely continue such movement or the sellers are still what pushing the price down. Do you get it now? But in a situation that wave two now come in, they take their profits and the market is expected to come down and it did not come below this wave one, and you now see a candlestick pattern with other measures, and wave three continues, starts from this point, it tells you that now they are now very certain that this market is what's going to the upside. That is why wave three is always the what longest and the most extended wave out of your motive wave. Are you following, please? It is very important. So that is, in this guy, you are seeing other fractals inside though. So it is usually the longest and the strongest wave. Is that not so? Now, this caused the market price to go higher and higher. This wave usually extends the high created at the end of wave one. So that is, at the end of this wave one, it extends above it to give us a new what? Higher high. Are you following? Then we all know that market cannot keep what's going all the way up like that. It must definitely what retrace. So it has gotten to a point at which it can go further again. Do you get it now? And it will not give room for what? Wave four. Do you get it now? So we have to open another one. It will give you room for what? Wave four. To give you room for wave four. So wave four now, in the previous wave, which is wave three, is that not so? Traders buying take their what? God bless you. They japa, take their profits, because the market is seen over what? Overvalued. Is seen what? Overvalued. And once TP has been taken at this point, it will give room for what? For a retracement, which gives us our what? Our fourth wave. Yes. So if markets move wave one, wave two, wave three, and they have seen that wave three has been overvalued and expensive, and they take their profit, what happened? Market will start selling, and probably is now at a what? At a what? At a resistance zone, and other measures being given, or supply zone. Are you following, please? Now, so that is what gives room for what? Wave four. Now, the way this wave, that is wave four, it tends to be what? Weak, because there are usually more people that are still bullish on the stock and are waiting to buy at the dip. So that is, your wave 4 will not go down too much. It is what? Always weak. That is the psychology behind it. That is the psychology behind it. Is gold going up? Okay. Now, then after it has now gotten to a point, boom, we now have the next wave, which is what? Wave 5. Now, wave 5 is the point that most people get the stock, and it is most driven to the upside. Okay. Traders and it is a point, yes, drive the market. Most people, traders, which are the traders, drive the market to the upside. You see? It is the point at which what most traders drive the market to the what? To the upside. And after and after and after this wave, boom, we get the three wave pattern. Going contrary to the overall going contrary to the overall 5 wave pattern. Is this explanatory? No. Now after wave 4, you understand to wave 4. So once wave 4 forms and wave 5 wants to begins, it is now telling you that this is the point at which trader wants to still what? Drive the market to the upside. Is that not so? Then after they drive this market to the upside, boom, we now get the what? The next 3 wave. Don't forget I said Elliot wave theory move in what? 5 to 3. So after these 5 waves has been formed, boom, you will now start seeing that the next wave that form after the 5th one will be contradictory to the what? To the overall wave, giving you a what? A 3 wave pattern. God bless you, of that overall. Yes. Mhm. Now, now listen to this. So other things you need to know about Elliot wave theory is that the first 3 or 5 are always what? Extended. That is, the movement are always what? Extended. Is that not so? That is, there will always be one wave that is longer than the other two, regardless of the degree. Which means that if you have 1, 3, and 5, one out of those 3 is always what? Extended, longer, which is what? Most of the times 3. 5 can be longer too. Do you get it now? But one out of those impulsive movements will be longer than the expected degree. when we talk about expected degree, it's your Fibonacci you used to know now, because you're expecting that market gets to minus 0.27 before it retraces. Are you following? Exactly. Now, that is, you have to know that after that forms, you now have your what? Your corrective waves. That is your three pattern what? Waves. Boom. Your three pattern what? Waves. We've done the 5 waves, right? So now, three what? Three pattern waves. So we call the three pattern waves the what? Corrective what? Waves. Corrective waves from what? From the 5 pattern what? From the 5 pattern waves. Please follow. From the 5 pattern waves. Okay. Ah, eh? Yes. Yes, we are. Who is asking the question? All right, sir. Yes, we are done with the 5 now. Now we want to enter the theory. In between that 5 pattern wave, we have 3 motive and 2 correction. So the 3 motive is your what? 1, 3, and 5. Your correction is what? 2 and 4. In between your 1, 3, and 5. Eh. So now we now want to do the what? The correct, yeah, exactly. You know, I said it's 5 to 3. We've done the 5 now. Now we want to do the 3. Now the 3 is seen as the what? God bless you. As retracement, as one retracement. But in that one, you have what? 3-wave pattern. Which we now see that 3-wave pattern as a corrective of the previous what? 5 pattern. God bless you. Now, the 5-wave trend, the 5-wave, the 5-wave trend, the 5-wave trend are corrected, are corrected and reversed by three, by what? Three, 3-wave counter trend. 3-wave what? Counter trend. Do you know the meaning of counter trend? That is another trend forming opposite to the what? To the initial trend. That's what we refer to as counter trend. Now, in the situation of markets going up, boom, and market is not coming down, that down is a counter trend to that up. Are you following now? Now, now, full stop. We use letters instead of numbers to identify our 3 what? Wave, 3-wave pattern. The reason why we are using alphabet instead, yes, the reason why we are using alphabet in replacement to numbers is because we want to simplify everything and not make everything clumsy. We already use number for our 5 exactly. Don't see it as impulsive yet, because inside that one too there's impulsive inside your 5. Just see it as a what? 5 wave pattern. Okay. You are right, oh. I don't mean you are very correct, oh, but I just want you to see them as waves for now. Now, after it has formed, we now have what? Letters. We use letters instead of what? Numbers to identify our 3 what? Wave pattern. Okay. So now, okay. Now see this. From the beginning, starting point, wave 1, wave 2, wave 3, wave 4, wave 5. So once wave 5 form, A, B, C. A, B. Do you see it? A. So let me clear it very well. Let me widen it very well so you can see it very well. Now, from the beginning, wave 1, wave 2, wave 3, wave 4, wave 5. This is now. Now, A, B, C. Are you following now? So this is standing as your what? 3-wave pattern for this 5 wave. A, this one, B, and this one, C. Are we seeing it? A, B, C. Within your A, B, C, this is your what? Impulsive, retracement, impulsive. Do you not see why I don't want you to start seeing them as impulsive? You will mix everything up. God bless you. That is, your corrective pattern can be in what? In diverse shape, but it will still be what? A, B, C. Which this is giving you a what? Head and shoulder pattern. Are we following? Now, don't forget, it's also the same thing for your downtrend too. Downtrend, A, 1, 2, 3, 4, 5. A, B, C. And market what? Continue to the downside. So where is your A? Where is your B? Where is your C? What pattern is this? W pattern. Yes. Lower low, lower high, lower low, lower high. You're supposed to have lower low, but you have equal low. And markets come up to break above this guy. A, B, C. Retracement. Now, what will now happen? Markets will now continue again the downtrend, because this A, B, C is seen as a retracement for this overall sell. So that is why sometimes when you draw your channel, hmm, sometimes it happens now. Now, if you measure it now, it has got the same length to this guy. Shebi, I told you that whenever a pattern forms, it is expected that after the breakout, it goes the same length. So once it gets to the same length, anything can happen. So this could be a what? A retracement for this overall what? Sell. For market to now start what? And start 1, 2, 3, 4, 5. And the whole wave continue like that. Which we are now seeing this as 1, 2, 3. Do you understand waves now? Ah, oh, oh, okay. Okay, Grace. Yes, ma'am. All right, are we following now? Now, listen to this. We now have different types of corrective wave pattern. Different type of what? At least we have 21. No, see, you don't need to know how everything form. In as much you understand market structure. Market structure will tell you that okay, boom, boom, boom. Even though it forms anyhow, A, B, market structure will show you. So you don't need to know everything. Is it? But we are able to know that the structure of this retracement is what? Head and shoulder. We were able to know that the structure of this one is what? W pattern. Another one is could be another thing. Do you understand? That's the way it is. So we will learn it. We will learn it all those ones later. So we will learn those one later. Now we want to do practical. So probably we can let's do practical now. You've understand your wave now. It tells you that you have five what theory. Your five has what impulsive from 1, 3, and 5, and retracement 2 and 4. That once it forms finish, boom, you now have a bigger retracement. That is your correction of that O as what ABC. So the ABC can be in what in diverse shape. All right. Uh, ah, oh, nice one. Yeah, you are doing well. Mm, it's doing well. Just be going up like that. Oh, mine no sound. Yeah. Yeah. But I'm still expecting this market to come in. Yes, currently it is in a downtrend. Of course, because check it on higher time frame. Do you see? Do you see this? Are you seeing it now? What is this? What is this? An overall uptrend. 1 day. Now come to 4 hour time frame. 4 hour time frame. What are you seeing here on as your support? What candlestick pattern are you seeing this? But it is expected that this market move all the way up to mitigate with this breakout retest. Then from this retest, anything that happens, you can wait. Oh, it's still good for you to wait, but me, I don't want to wait up to this time because we are in 4 hours. It will take longer time because the overall sentiment is still the what to the upside. Now look at this. Look at this. Okay, market sold, retraced, impulsive. Now it is retracing. So what will you do? What will you do from this point? Is that not so? Now, even if this market is to sell, I am expecting it to come here and 61.8. See where market is. But has it given you any chart pattern to tell you that? See now. But this can only be done by professionals. Hmm? Eh? I'm expecting this retracement to get to 50% and 61.8. That's what I told you guys now. Yes, I'm expecting it to go there. Because after the breakout has happened, has there been any retest? Exactly. This is M pattern. I'm very aware that this market is coming down. Yes. So that is why we have our last TP at what? 3340. Because 3340 is at where? At 61, between 50 to 61.8%. Once it gets there, boom, we are out. And anything that happens from there, it's fine. So wave one, wave two, wave three. Now wave four is currently happening. Do you get it now? Are we following? Wave four is currently happening. So once this wave four ends, it's now come down, boom, to this point, or it becomes this and it goes back to, it will now be A, B, C. I'm I'm trading a what? A corrective wave. No, no, I can use this. From here, wave one, is that not so? Wave two, uh-huh. Wave three. You can see how elongated the wave three is. Wave what? Wave four is currently happening, so we don't know where it will end until probably it gets here, or it gets here, which is expected that it come in between 50 to 61.8. Wave four. Then wave five. Wave five can now come down either short or this, eh, to give exactly, or break the structure, but we don't know yet. But me, I am expecting that this market will buy, then wave five, wave four, wave five, then A. Do you now see this? A, probably A gets here, B, C. The market comes down again. But I'm just using this as an example. We are in an uptrend though, not downtrend though. So I'm not supposed to calculate this guy like this, because this is another fractal. This market is still a buy trend though. This sell you are just saying is just to guide the movement of what is happening currently, which I'm still expecting this. It will definitely break, because the only thing that can invalidate this guy, the only thing that can, where is delete? uh, what have I done? Now see your daily time frame, see the channel of your daily time frame. See, now market has even gotten to a what, to another block here. It has, there is a, see this other block here, it has filled the gap. There was a gap here, it has filled it. See, there is a what, there is a zone here. You can see that zone. You can see this subzone here. Eh? All right. Now let's start again. Let me take this one.